Let's get in the mid-market voice of the day on the show immediately. Andrew Holland of Avendus joins us right now on the show. Andrew, good having you. Thanks so much for joining in, and best wishes for a new year from all of us out here at Bloomberg Quint.
Yes, Happy New Year to you and all your viewers too.
Thanks a lot for that, Andrew. Will it turn out to be a Happy New Year, Andrew? Because I was looking at what you've given us in terms of your thoughts, and you do believe that if indeed there is a correction which comes in and ensues, we could see levels which are almost 10% lower than where we are currently.
Yeah, that's really of the global factors. You know, we're sitting in, as we have been now for some time, liquidity-driven markets, not just in India but globally. And you try and work out and think about what will burst that bubble. And in the past, nothing has really kind of burst it. It's been temporary kind of falls, and the buy and dip strategy has worked very well. But as we come towards a tightening in the US, not just through interest rates but also through the balance sheet tightening, then I just wonder, how the bond markets will react to that. If there could be any kind of turmoil in the bond markets, which we haven't seen. If that was the case, then obviously you'd see a lot of money which is going to come into emerging markets, bond markets, being quickly taken away, and that exacerbates kind of currency depreciation, and that could throw a few wobbles for the equity markets as well. So that's really the biggest concern in the short term. But longer term, we stick to our view that both globally and locally, we remain very positive about the kind of mid to longer term. But the shorter term, liquidity-driven markets do throw up nasty surprises, and whilst we haven't seen any yet, as markets keep kind of climbing higher, the risk becomes a lot more kind of severe on the downside.
By the way, because of that whole talk of various companies eyeing Bhushan Steel, that stock is on a bit of a roll today. It's starting off on a big note, so watch out for Bhushan Steel. Watch out for GVK Power and Infra. That stock is starting off about another 5% higher. I think there's mentions about Equity Intelligence recommending it as one of the top ideas. I think the last 5 or 6 sessions, GVK Power has been on a roll, on an upper circuit for the last 5 days. So good going for that one. And then a clutch of names. But I think that one pocket that stood out for me is Telecom. And Andrew, I'm jumping straight to some of the newsmakers before we talk about the broad macro as well. I have a couple of questions there. But Telecom, I mean, what's happening? Just when we thought that the price wars could get a bit ugly, Reliance Jio ups the tariffs. It probably gives, at least the market believes, the incumbents some leeway to increase prices as well. But more importantly, this whole consolidation now leading to a 3-player market, and people believing that, hey, could this be a start of pricing power returning back to a very small player participated industry? What are your thoughts on telcos?
Well, I think you've actually summarised it very well in terms of where the market's kind of now thinking more positively. Our view was that Reliance probably had another opportunity to squeeze a little bit harder, but they decided that that's not what they want to do. So you're right, it gives a little bit of pricing power, it gives a little bit of kind of lull, but I wouldn't be surprised if Reliance don't come back and just tweak their aggressiveness again, just to take some more market share. So whilst we become less negative on the telecom sector because it has been going through its pain for over 3 years now, I think the initial part of the rally was on accounting differences between, say, a Bharti and a Reliance, and if you kind of put the same accounting norms there, which I'm not sure I would be so fundamentally kind of approving of, but it's worked for the sector. The sector's been underowned, unloved, and you've seen these bounce back. But it's going to take some time for this consolidation to work through, and I still think there's, I wouldn't be chasing at these levels. I think it's had a reasonable run, and I think there's probably better sectors to look where you can see the earnings visibility a lot higher without some very aggressive player who's trying to get his market share.
What about upstream? I'm using Reliance both as telco and then an oil and gas player, because I clearly see that your revised crude target is $70 a barrel. If anything, a bunch of sell side names have started turning bullish on some of the upstream names like ONGC and a few others too. What gives you this bullishness on crude? But two, more importantly, what about upstream? I would probably even add the downstream and the oil marketing companies here.
So, when we first started the Avendus Absolute Return Fund in our kind of newsletter in March, we said that when the oil price was around 40-45, that if our expectations of global growth was to come off, then we start to see the oil price move towards the 60 level, which it has. And as we go into 2018, that supply demand anyway for oil is kind of nearing, kind of being equal. And if you get the expected kind of push in the US through fiscal spending because of the hurricanes and the tax cuts, which look likely to go through, then this will get an extra fillip to global growth. So it'll start in the US, Europe we're seeing quite strong, and then obviously Japan will be the next country to kind of see that pickup. So that will increase the demand for oil, and obviously with China and India, growing at 6 to 7% each, again the increase for oil will be a welcome news for the producers. So we think the oil price could move towards 70 over the next 6 to 9 months, and obviously that would be great for the oil companies in India, including the names that you mentioned.
Okay, Adani Ports is amongst the top gainers. I think promoters have been buying aggressively from the open market the last 2 or 3 months. I have heard 3 instances of that. So that is doing okay. And Ultratech Cement is participating a couple of percentage points higher in the session today. Cement, Andrew, in the recent few years, with the kind of valuations that we are trading at, this is probably the first post-monsoon season wherein I'm seeing the street by and large having a consensus bull call on cement, never mind the fact that valuations are hard. I think one of the key reasons that came out in the sell side notes today was that capacity addition is not that strong. One, what is your position out here? And two, why is it that the view that you have on cement?
So it's a very simple story that you're right. There's no new capacity. There's probably a little bit of M&A within the sector, which will obviously kind of boost prices in terms of valuations, and they all have pricing power. And notwithstanding the problems they've had in the past of kind of acting as a cartel, they will continue to push prices higher. Or try to push prices higher, and particularly when we go into 2018, when we start to see the economy start to pick up from the GST and DMON short-term kind of problems. This will be a great fillip for them. My only worry is about input costs, because obviously we have seen petcoke prices rising, and that could be something which we'd have to look at a little bit closer. But the good news for this industry is that they have capacity utilization which is running very high, and they have pricing power. So that will continue to push earnings higher going forward. So it's a sector which people like because it's not really affected so much by the GST regime, but more because the government spending on things like housing and roads and everything else in infrastructure. So that's helping keep the momentum for these cement companies.
Okay, I see that you are overweight automobiles. I'm not surprised here, but I'm just trying to figure out where within this whole basket are you bullish on. I mean, if Hero MotoCorp can sell 3 lakh units on Dhanteras, you can't not be bullish.
No, and it's very selective. Obviously, you got to look within the two-wheelers of which companies you feel are going to continue to do well, and Hero have shown that in terms of their figures. In terms of the four-wheelers, obviously Maruti continues to do well, and obviously with a weakening rupee, so a weakening yen against the rupee, that's obviously good news for them as well in terms of input costs. So you have within the two-wheelers and four-wheelers quite two dominant names which are doing very well, and then you can say, okay, is who do I need to be on the truck side in terms of heavy commercial vehicles, and see how you need to position for that pickup there. And obviously there's a very limited number of stocks which you can buy. So that's why the sector, you've got to be very selective, because there will be those companies which are doing okay, but it's all priced in. And I think that's my concern, is that if things do slow down at any time, then you've got to have the catalyst to increase market share, and there's not that many that can do that at the moment.
Interesting. Andrew, you've been associated with a reasonably large sell-side name in the past as well. You understand this whole business so well. I'm talking about the diversified financial players. What's your sense? I mean, do you believe, and considering the fact that now we also have an AMC IPO coming up in the next 3 or 4 odd sessions, what's your sense of the quantum of upside that remains in these players? I know they are multi-year stories, the brokerage stroke diversified financial names stroke AMC players, but is it possible for people to make a fresh investment into these players and still make big money over the course of the next few years?
It's a good question. It's not a sector. I mean, that brokerage sector is not a sector which we actively follow. So it's difficult for me to say what the fundamentals are. But let me put it slightly differently. We think over the next 4 to 5 years will be a $4 to $5 trillion economy. Now, if that's the case, then financial services will have to play a big part in that. We're playing it at the moment through 2 parts. One is the private banks, the ones with the ability to continue to take market share, and through affordable housing, where we feel that that will be a big sector going forward. So you've got to be where you feel that the market's going to be, and I think we'd say the insurance sector, that's obviously kind of emerged with all the IPOs. We think those have been very richly priced. And with and what we've seen is really lackluster performance thereafter. So we're not gung ho on everything, but we think the financial sector, if you're going to have that size of an economy, this is going to be a very big sector going forward. We're playing it in 2 different ways at the moment.
Okay, Andrew, before we wrap up, you whole host of contra calls, whole host of overweight calls as well. What is that one big theme that you guys are bullish on from this somewhat onto maybe the next somewhat or the next 18 or 24 odd months? That one large call.
It's difficult for me to give individual stock names.
No, of course.
But I will say that, if I look at FMCG, if I look at FMCG, I think the theme that I would look at within the FMCG sector is that, you had 3 stocks which are under, the radar from a global perspective. So if you look at Unilever, you had Kraft, which was, obviously made a hostile takeover. They're sitting in the wings, so Unilever themselves have to get their act together at a global level. Nestle has a large hedge fund activist, sat there and now making them kind of have sales and profit forecasts going forward, which they've never done in the past. And Colgate's in the same camp. So you've got 3 multinationals from a global perspective that have to really kind of perform better, or there's people waiting in the wings that will do something about it. And obviously that will have a positive impact on the local companies in India, who themselves will benefit greatly from GST. So I think you've got a lot of tailwinds for the FMCG sector, particularly on the multinational companies.
Fair call, Andrew. We leave it at that. Thanks so much for taking the time out, and have a great week ahead.
Pleasure.